Intro. Imagine you're on a deserted island, trading pineapples for coconuts. No fancy bills, just bartering based on what you need and have. That's how things used to be, but then money entered the picture, and things got a little more complicated. 1. Pricey pineapples. Money made trading easier, but it also added a strange twist. Suddenly, everything got a price tag, even pineapples. And guess what? Those price tags kept going up. Why? Well, that's where it gets interesting. 2. Money madness. One reason prices climb is because there's just more money floating around. Think of it like printing more pineapples on our deserted island. With more pineapples, each one becomes less valuable, right? Same goes for money. The more there is, the less each dollar, euro, or one can buy. 3. The bank of coconuts. But where does all this extra money come from? Enter the bank. Now, imagine if some clever islander started storing coconuts for you, then lending them out with a little something extra added on. That's basically what banks do with money. They take your savings, lend them out to others, and charge interest. Boom. More money in circulation, and higher prices to follow. 4. Loan sharks and debts. Now, here's the catch. When you borrow money from the bank, you don't just owe back what you borrowed. You owe that little something extra too, called interest. It's like the bank's rent for your borrowed coconuts. And guess what? This cycle of borrowing and debt keeps the whole money machine chugging along. 5. Money mayhem through time. This whole money debt dance has been going on for centuries. Remember that fraud snitch we talked about? He'd store people's gold, then lend out fake golden promises. Eventually, it all came crashing down. But the banks learned from his mistakes, developing a system that, well, mostly works. 6. The magic machine. Today, the big money maker is the central bank. Imagine it as a giant coconut factory, printing new pineapples, dollars, euros, etc. every day. This keeps the money flowing, but guess what? It also pushes prices higher. More money chasing the same amount of stuff equals an inflation fiesta. 7. Why you should care. Understanding this money debt game is crucial. When prices rise, your hard-earned coconuts or dollars buy less. It's like your paycheck shrinks every month. That's why it's important to know how the central bank plays with its interest rate knob, trying to control inflation without triggering a deflationary coconut avalanche. 8. When coconuts crash. Remember, deflation can be nasty too. Imagine all your coconuts suddenly dropping in value. Companies struggle, jobs disappear, and the whole island economy goes bananas. That's why the central bank dances a delicate jig, trying to keep prices just right. 9. Beyond the island. Our island may be a simplified metaphor, but the money debt story plays out globally. The 2008 financial crisis, sparked by excessive borrowing and lending, is a stark reminder of how fragile this system can be. 10. Who's in charge? The Fed factor. In the US, the Federal Reserve, nicknamed the Fed, is the big kahuna of coconut printing. It's not a government agency, though, but a private bank with huge influence. Understanding its moves and the US economy's deflationary trends is key to navigating the global financial waves. Outro. So, there you have it. Money and debt, a complex dance that affects us all. Remember, knowledge is power, and understanding this financial jig can help you weather the economic storms and make wise choices with your coconuts. I mean, dollars. Now go forth and conquer the financial island.